JSE All-Share Index. The session fairly upbeat yesterday, snapping a 6 straight losing streak. The mining sector stood out with mining companies including Kumba Iron Ore, Exxaro Resources and Northam Platinum rising. Now, for insights on what is driving the markets this morning, we're joined by independent markets analyst Jimmy Moyaha. Jimmy, good morning to you and thank you for your time. Let's kick off the conversation with your quick overview of how the markets are shaping up in early trade, the factors influencing trade this morning.
Morning, Toli. Morning to the viewers. I think the muted open we've seen in markets from the local side, as well as if you track what's happened overnight within Asian markets as well, and early European session, is very indicative of the announcements and the news factors that markets are having to contend with. We know that we've got a Fed rate decision today. We've got an ECB rate decision this week as well. So there's a lot that the market still needs to process and digest around whether or not we are firmly in disinflation mode and we are able to sort of anticipate that softer landing in the US, but also look at what it means for global recoveries and global growth outlooks. But at the moment, the markets are keenly awaiting economic data that will then suggest or further confirm whether or not we are in that space or whether we still have some tough wins ahead of us. In terms of the local side of things, we saw that the market opened, as I said, fairly quiet, fairly muted, not much movement on that side. The rand showing a little bit of weakness, but this is off the back of a couple of days of strength. We're sitting at about 17.62 against the dollar, about 22 rand 70 against the pound, and about 19 rand 49 against the euro. So marginally weaker for the day, but overall still stronger for the week. As those announcements come out, as I said, around those data points, we'll probably see markets start to react and move towards the latter part of the day as well.
Yeah, let's talk about the International Monetary Fund, IMF for short, raising its outlook for the world economy this year. Talk us through those comments from the IMF and, importantly, where these projections put emerging market economies like South Africa.
Well, of course, the sensitivity around some of the conditions that have been prevailing within the markets have definitely weighed in on sentiment, whether from the IMF or the World Bank. And you're seeing that the IMF statement now speaks to that as well. They're saying that the recent resolution around the U.S. debt ceiling, but also around what could have been a U.S. banking crisis, the fact that the U.S. was able to navigate both of those situations and avoid critical disasters there has improved the IMF's view and outlook on the U.S. markets and potentially what we could be seeing around the world. So they've revised up from April's numbers, they've revised growth outlooks for the US, for the world, for the UK, for Brazil, and even for Russia. They've said that they've kept 2024 outlooks sort of relatively the same in most cases, but a couple of tailwinds are expected this year from relaxing conditions, the fact that central banks around the world have been able to keep inflation in focus, keep reining in inflation, and those efforts are being seen in terms of those inflation prints as they come out. So overall, the sentiment seems to be improving, and just the viewpoint to say that we might have a softer landing in the US, but there's still about a 60% expectation or 60% estimates that we might still go into recession in the US. So we're not out of the woods yet, but things are looking a little better than they were in April. In terms of where that puts emerging markets, I mean, as I said, countries like Brazil have been forecasted or revised up rather. India's been revised up as well. China's been left, interestingly, unchanged, but we've seen that that's been as a result of the Chinese economy recovering slower than expected. But if you look at all the emerging market peers, I mean, you look at all the BRICS countries, India expected to grow 6.1% for the year, Brazil 2.1%, China about 5.2%, Russia about 1.5%. Unfortunately, of the BRICS countries, it looks like South Africa is the only country that would be lagging behind from global growth forecasts in that respect. But by all accounts, emerging markets set to be okay for this year, possibly even stable for next year.
Let's talk company news. Cash Build coming out with their fourth quarter operational update. Help us make sense of their numbers.
So they didn't have the best set of numbers in terms of what they're forecasting from a revenue perspective. They forecasted that sales and revenues have been down across all of their stores. They did, however, add about 10 new stores that contributed about 2% towards their revenue growth. But of course, this was offset, as I said, by sort of a 2% decrease in the revenues from their 308 existing stores. The business overall is anticipating that sales will be down for the period. They've also outlined that the slowdown is very evident of what sort of economic conditions they've been experiencing in South Africa, and the fact that if you look at some of their importing products, that has had a bit of an effect on their business. But overall, it looks like their sales figures will be down, and we are expecting those full annual results out at the end of August.
Let's conclude with British American Tobacco, or BAT, posting its half-year report for the 6 months to the 30th of June 2023. How did they fare?
They've reported really strong numbers as well. Revenues were up 4.4%, largely driven by their new categories revenues. That was up more than 25%. They've also outlined that their revenues from their non-combustible categories and components, that was up about 16%, or they expect that will contribute 16% rather towards group revenues, which is higher than what it contributed in the previous financial year. So it's about almost 2% higher than what it contributed in the previous financial year. Their adjusted earnings forecast to be up, reported headline earnings, or earnings per share rather, up about 118%. So strong numbers from the business overall. Their operating margins are improving and strengthening as well. Their new CEO, he's been in the role for probably around 10 or 12 weeks at this stage, has said that he's impressed with the resilience of the business and the reporting, or the numbers that they're reporting in this particular period. And by all accounts, it looks as though it's a significant improvement from their 2022 first half period that they reported on. So strong numbers from BAT. It'll be interesting to see if they continue that momentum into the second half of the year and finish off the FY23 strongly as well.
Jimmy Moyaha, let me thank you very much for that markets update, giving us a quick round of how the markets are shaping up in early trade. All right.